Podcast is now starting.
Hello, everyone, and welcome to today's NAA iSeries webinar. I am Curtis Kitchen, the Director of Communications for the National Auctioneers Association. And I would like to thank you for joining us for today's newest iSeries installment. iSeries is a free informational webinar series produced by the NAA in order to share auction industry knowledge and insight with NAA members and the general public. We are excited to present today's topic on building your commercial real estate business, but before we do, we want to share more with you about NAA. Headquartered in Overland Park, Kansas, NAA is the world's largest association dedicated to auction professionals and represents the interest of thousands of auction professionals in the United States and across the world. NAA is dedicated to providing educational programming and resources to help members advance themselves professionally. The NAA's mission is to provide critical resources to auction professionals that will enhance their skills and successes, and its vision is that NAA members are the preferred auction professionals used in the marketplace. Among resources provided is the iSeries, and today's session will be presented by Kyle Swicegood. Kyle is a first-generation auction professional who started his business at the age of 24. During the 2000s boom, Kyle's business provided the opportunity to develop shopping centers, office buildings, and conduct a successful 1031 tax-deferred exchange brokerage business. Believing in continuing education as a resource for growth, rather than a requirement to maintain licenses, Kyle has invested in his NAA education by earning both the CAI and GPPA designations. He also holds the CCIM and ALC designations as well. Kyle has worked with Fortune 500 CEOs, been a subcontractor for the FDIC, and transacted many complex real estate transactions. His resume boasts assets such as entire mountains in western North Carolina, Civil War battlefields in North Virginia, and net leased properties all over central North Carolina. More recently, he was hired to spend approximately 1 full month in Puerto Rico managing assets in a failed banking institution. Considering that educational track record and a wealth of experience, we are excited Kyle is here today to share with all of us. Before the presentation begins, please note that you may take part in the conversation. Type and submit your questions at any time during the presentation, and we will get to as many of them as we can during our brief Q&A period. After that, we will also ask you to please take part in a very short 3-question poll as well. With that, Kyle, thank you for coming on with us today, and welcome.
Fantastic. I appreciate it, and thank all you guys out there. I'm sure I probably know some of you, and it's beautiful, sunny, and just a little bit nippy in North Carolina. So I'm going to provide to you guys what I call a cursory review of commercial real estate. For some of you, this may not be going deep enough. For some of you, it may be a good introduction. But essentially, the question is, am I going to bore you? And my goal is to not have you on the other end of the screen doing this right here, but I'm probably going to have you drinking from a fire hydrant, so I'm going to go pretty fast. And apologies for the speed at which we're going to go. But the question is, commercial real estate defined. So I know this sounds like a crazy question, but I think you'll understand why I'm providing this. One definition is commercial real estate is any non-residential property used for commercial profit-making purposes. Commercial real estate includes stores, malls, office buildings, and industrial parks. So that is one definition, but I'm going to tell you that that is not the definition I would use, and I'll explain to you why. I believe the term commercial real estate, which also could be called commercial property investment, or here's the key word, income property, refers to buildings or land intended to generate, again in highlighted red there, profit, either for capital gain or rental income. So where the other definition excluded residential property, I actually use that because I myself, as well as I'm certain some of your clients, customers, etc., use residential property for profit making purposes. So I was going to do first things first, but the introduction was real good. I'll go over it real quickly. I started my firm in 1991. I was strictly a real estate broker when I began my firm in 91. I started buying income producing properties, residential and commercial, built an office condo, 5 condos in 97. In 1999, was fortunate to be able to develop, build, lease, and later sell, by the way, in 2008, which was incredible timing considering the recession that we went through, a 41,000 square foot retail shopping center that had 5 out parcels. I acquired my CCIM, and I won't go into that, but encourage you to Google that designation. It's a phenomenal designation that teaches you commercial real estate and the time value of money. Believe it or not, September 2001, if you'll remember, that was a very significant and scary time in our world. I had speculated on a 24,000 square foot industrial warehouse, finished it right before 9/11, and was blessed to be able to lease that and have had it leased ever since. I was a general contractor, still am. Got out of that, though, when the recession hit. We built and developed about 50 homes and residential subdivisions, etc. I saw the light in 2009 and got my auctioneer's license, and my life has changed significantly from that point, and am, like you, have fallen in love with our trade. Co-ventured right out of the gate with who I would call one of my mentors, Tom McGinnis, and we auctioned a high-rise in Raleigh, North Carolina. Remember what I said, I co-ventured. I don't think that's a dirty word. I think sometimes it's smart to get engaged with someone who maybe knows more than you do. You can learn from that situation. Later, I got, during the recession, I got engaged with Colliers International and became a badge subcontractor for the FDIC, and started working on failed banks, etc. Spent a month in Puerto Rico. But here's the cool deal. Referred a large portfolio of bank assets to my CAI brother in Tennessee, Justin Oates. And later, and by the way, he did an excellent job, but later I watched him make one of the largest auction sales of commercial real estate I have ever seen. So go CAI. If you don't have it, you need it. So the 2 best career decisions from a standpoint of commercial real estate for me was getting my CCIM and coupling that with the CAI, which I believe are what I would call equal designations in the auction world and in the real estate world. And because of these 2, this is that shopping center that I told you that we developed and sold in 2008. I actually auctioned and sold that. We wound up selling that asset. And of course, I sold the entire shopping center in 2008. And it was because of the tools that I learned from CAI and CCIM that gave me the tools to accomplish that sale. So my goal today is to talk about 2 very important real estate concepts: capitalization rates and the 1031 section of the IRS code. Again, this can be boring stuff, but I'm going to tell you that I believe these are 2 very important ideas and concepts that you can use to make money for your clients. And when you make money for your clients, you make money for yourself. So the first thing I want to tell you is I am not a lawyer or a CPA. So the things that I tell you, I'm telling you from an auctioneer standpoint and a brokerage standpoint. I always encourage a professional to have a CPA on their team and a lawyer on their team. So the question is, what are commercial buyers looking for? What are commercial buyers looking for? You know, I believe they're looking for 2 things. They're looking for cash flow and an upside. What does that mean? They want to make enough and generate enough income on a monthly basis to pay either debt or to generate the income that they're desiring if they're not financing the asset. And they want 5 years, 7 years, 10 years down the road, the asset they bought for X to be worth more than what they paid for it, and that's the upside. So capitalization rate. Let's go ahead and get a definition of what capitalization rate is. Cap rate is a real estate evaluation measure used to compare different real estate investments. There are many variations, but most common calculation is the ratio between net operating income, also known as NOI, and the capital cost, which is the purchase price. So for example, if a property recently sold for $1 million and it had an NOI, and I'll explain that, of 100,000, the cap rate, and what commercial brokers refer to that asset sold at a cap rate of 10%. Now, what is net operating income? Net operating income is a calculation used to analyze real estate investments that generate income. Net operating income equals all revenue from the property minus all reasonably necessary operating expenses. So let's assume that I have got a commercial building that has 12 units, and I'm getting $1,200 a month from each unit. That would effectively give me a gross potential income of $172,800. And let's say that we're getting some ancillary income from some other aspect of the asset, and let's call it $3,000. So now that puts our gross potential income at $175,800. Now, you're always, as a buyer, you want to figure a vacancy. And I'm figuring 10% vacancy here. So I've already got a formula set in here at a vacancy based on the gross potential rent of -$17,000, which gives me an effective gross income of $158,020. Let's say that we've got $3,800 in insurance. Let's say the taxes are $10,200. Let's say that the maintenance is $10,000 a year, and let's say utilities are $3,500. And let's say there's a pest control company that spends $2,000, and a property management fee of 10%, which would be -$17,280. So that brings our total expenses to -$46,780. Now we have net operating income of $111,740. So decisions are made from the knowledge of net operating income. Net operating income of $111,740 using a cap rate. I would consider paying possibly this asset, depending on lease terms, etc., $1,117,400. If I was looking at it because it was a riskier asset, I might increase the cap rate, which can be confusing, to 12%, and then using the math, I would consider paying $931,166. Remember, the higher the cap rate, the lower the value. That's a upside down thought, but the higher the cap rate, the lower the value. Factors to consider: the term of the lease. Is this a 5-year lease or a 20-year lease? Is it a Walgreens lease, which is a very good lease, which would have a low cap rate, or is it a mom and pop is the tenant a mom and pop, which is a more riskier lease? Is there deferred maintenance? Is there roof issues that are coming down the pike? What's the cost of money, which is always an important aspect when you're dealing in commercial real estate. If my cost of money, which is high, was 9%, and I was buying an asset at a cap rate of 10, I would be risking the deal on a 1% spread, which is a bad decision. Cap rates are determined by market. When getting involved as a buyer, seller, or an auctioneer representing a seller, you need to have an idea of what the NOI of an asset is and what going cap rates for similar properties are. You're going to find that out by talking to appraisers. become friends with a lot of the commercial appraisers. So I am going to skip this real quick because we are running short on time, and we'll talk about depreciation. If you want to send me an email, I'm putting this on here for just a second for you to read. You can come back and find out about the advantages of commercial real estate and the depreciation rules that exist, and that is one of the reasons people buy commercial real estate, because it is a depreciable asset on your tax return. Let's go to 1031. We've got 5 minutes, and this is important. If you've never heard of a 1031 exchange, pay attention, because this is a way to escape taxes. Using the IRS Section 1031, a properly structured 1031 exchange allows an investor to sell a property, to reinvest the proceeds in a new property, and defer all capital gains taxes. That's powerful. Here's an example. If you look on the side where it says sale, on a regular sale of $1 million, you might have a basis in that property of $300,000, which means your capital gain would be $700. Your taxes, which is approximate, would be $105,000, which would give you reinvestment capital of $595,000. If you defer those taxes, you're essentially having another $105 to reinvest in another asset. And I will tell you how you can escape those taxes completely here in just a moment. The IRS permits investors to defer the payment of a tax on the gain from the sale of a property held for productive use in business, trade, or investment, provided that the property is exchanged for a like kind. That basically means that you have to sell an income-producing property for an income-producing property, or a raw piece of land held for investment for an income-producing property. Always include the addendum to any purchase sales contract that you're doing, a 1031 exchange. And again, because of time, I'm going to let you come back and read this following today's presentation. Earnest money. Here's the important thing with 1031s. You can't touch the money. A buyer has to strike that. When you sell a property, the money that you receive, including the earnest money, has to go into an intermediary's hands. You can never touch it. In fact, I'm going to go ahead and jump over to this screen right here. Look at you up at the top. You sell a property. You relinquish a property to a buyer. See where it says buyer of your old property. The buyer's sales proceeds go into a qualified intermediary's hands. It's your money, but you're putting it basically in trust. And typically it's in a title company. And then you use that to repurchase a property later. Now, down below are some important dates. When I sell a property, I have to properly identify 3 properties that I'm willing to reinvest in. I have 45 days to do that. Now, once I have properly identified the property that I'm wanting my money to go into, then I have 135 days after that to close on the property. So essentially, the federal government is letting you use the money that would typically be tax money to reinvest and to expand your estate. Now, the question is, how can I do away with those taxes, period? Well, the way you do that is you die, sorry, but it's a great estate building tool. For example, let's use my father, who has purchased a property, and then he 1031s it into another property, and then he 1031s it. Over the course of 20 years, he may do 3 or 4 1031 exchanges, and his tax deferment, let's say, is $300,000 or $400,000. At time of death, the basis, which is the value in the federal government's eyes of that property, has a stepped up basis of the value at the time of death, which means all of those capital gains go away. So it's a really great tool. and I encourage you to talk to your accountant and to learn more about the 1031 section of the Internal Revenue Service Code. Commercial databases that I use is CoStar Group and LoopNet. That's where I publish all of our listings that we have, auction listings, etc. We put them out there for the world. We believe in empowering the brokerage community on our sales. So what does all of this have to do with the auction business? Well, our buyers, your buyers, are savvy. We must understand the portfolio concepts they use to create wealth. Having this financial nomenclature in your vocabulary, for example, what NOI is, what effective income is. Using this nomenclature gives your clients and customers the confidence and that makes them comfortable that they're dealing with a business person that understands finance and understands commercial real estate. When you auction an asset with income, now you can determine how the capitalization rates work to determine value. We even use capitalization rates on residential property when we're looking to buy property. Many of you own real estate. And by the way, it can't be your primary residence and it can't be your second home. But when you have a capital gain, you're either going to pay Uncle Sam or you're going to defer it and purchase another asset and essentially use that capital gain taxes to your advantage or pay it one way or the other. That was fast. And I jumped over a number of slides because I've made too many. So the questions are, do you have any questions? And the second question, do you have any questions that I can answer?
Well, that's the best question, actually, Kyle. We thank you so much for your presentation today because we do have some questions, and we're going to get to those here very quickly. At this time, as we mentioned earlier, we will now open the floor to our iSeries attendees who do have those questions. If you have not done so already, you can submit your question, and we will do our best to get to as many of them as we are able. Kyle, our first question, how do buyers figure in deferred maintenance when determining value?
How do they determine deferred maintenance? Well, there's a number of ways. I mean, first of all, some people hire inspectors, just like there are inspectors that look at residential properties. There are commercial real estate inspectors, and that can make or break you. Because when you're dealing with when you're taking your commercial business from let's say $110,000 residential property that's yielding $1,100 a month to an asset that is $1 million, the potential deferred maintenance can rob you not only of your profit, but it can rob you of your solvency. So we like to hire people out to do that, and we have a little bit of an understanding of that ourselves because we've owned property for a long time.
Okay, next question. You mentioned being friends with appraisers. How fast did it take you, or how long did it take you to realize that it was in your best interest to make friends with those folks?
Overnight. I will say this, when I first got into the brokerage business, appraisers would call all the time. Hey, we want some information on this sale that you had. And I was like, I'm so busy, for the love of Pete. But here's what I'm going to tell you. Those people need to be your best friend, because you need to know your trade. You need to know the inside information, and appraisers guide the direction of the marketplace, whether you like it or not.
All right, next question. What's one common mistake that auction professionals make when they're first building their commercial real estate business?
I will say this, weaving auction into commercial can be challenging because let's face it, the majority of assets that we sell, the people that are selling it, they have different goals and objectives. I look at purchasing on the auction side as much as I do selling. I have more opportunities taking my seller's money and getting them engaged in the business of buying versus selling at auction. We sell more commercial land than we do income producing property. I like to take my clients' money out of some of the sales that we create and put them in income producing property. And depending on how much money they've got to reinvest, that could be residential income producing property, or it could be net lease properties, doctor's offices, retail centers, etc.
All right, and the final question we have time for here, how do you find sellers of commercial real estate if you're just starting out?
Well, I mean, starting at your tax office, getting engaged in, there's an organization called ICSC, International Council of Shopping Centers, is a great way of finding your developers and going to your GIS and doing a little research. I find that you have to, our auction company, for the most part, we're able to play defense because we get so many calls from people wanting to sell things. We have to play more offense when we're attempting to get the commercial assets listed.
All right. Okay, everyone, that'll wrap up the Q&A portion of today's event. Thank you to everyone who submitted questions. We do apologize if we did not get to yours. We will make those available to Kyle after we are finished here today and make sure that he has a chance to answer those away from today's presentation. So thank you again for submitting your questions. It is now time for you to give us your feedback on today's session. Please see the poll on your screen and answer the questions as they appear. We will move fairly quickly, so please answer as swiftly as you are able. Your first question of 3. How long have you sold commercial real estate? And you'll see the answers there in front of you, anywhere ranging from I'm brand new all the way up to 10 plus years. Again, your question, how long have you sold commercial real estate? We'll give you just a few seconds to answer that first question. Okay. And then the second question in today's poll, on a scale of 1 to 5, with 5 being the highest and 1 the lowest, how would you rate today's iSeries presentation? Again, on a scale of 1 to 5, with 5 being the highest and 1 being the lowest, how would you rate today's iSeries presentation? We'll give you just a few seconds. Okay, and the final question today, I plan to attend conference and show in Jacksonville. The yes, maybe, or no answer is there in front of you. Again, the question, I plan to attend the 2018 NAA International Auctioneers Conference and Show in Jacksonville. Everyone, we hope this is a 100% yes. We hope we can see you here in a few months. All right, and that'll conclude today's survey. Thank you for your feedback. Before we end today's session, we do have some updated information on upcoming NAA events. Registration for NAA's pre-conference educational programs are now open. This includes the Accredited Auctioneer Real Estate class set for July 15th through the 17th. You can register at conferenceandshow.com. Scholarships for this and other NAA education offerings are available. So you can find out more information about those at auctioneersfoundation.org. Again, if you want to register for that class, go to conferenceandshow.com. Information for scholarships, go to auctioneersfoundation.org. Information for all NAA events can be found at auctioneers.org/events, and we hope you will join us in Jacksonville in July. As we close today, you will get a replay of today's session through an emailed link by the end of this week. In addition, if you are an NAA member and you've missed any previous iSeries sessions or would like to hear them again, iSeries archives are available at auctioneers.org/NAA-education. Again, iSeries archives are available at auctioneers.org/NAA-education. You do need to be an active member and you will need to log in to access those. And finally, an iSeries programming note. We will be back with you again in 2 months on Wednesday, June 6th at 2 p.m. Central. We'll explore how to get hired. It's a session designed for the contract auctioneer, so we hope everyone will join us in 2 months on Wednesday, June 6th at 2 p.m. for how to get hired. We will be sending specific information on that to you in the near future. Thank you again to Kyle for sharing his insight today, and thank you to all of you for taking part in today's NAA iSeries. It concludes today's webinar. Have a great day, and remember that NAA iSeries exists because it's about you. Have a great day, everybody.